It's almost 11 a.m. in Hong Kong, 1 p.m. in Sydney. Welcome to Bloomberg Markets Asia. I'm Paul Allen. Here are the top stories. Asian stocks flat ahead of a U.S. jobs report that's set to shape the Fed's rate cut outlook, or rate outlook at least. The ECB, though, did cut rates, delivering a 25 basis point reduction. No signal, though, on the next steps. Investors awaiting China's trade numbers. Those are due at any moment for clues on the strength and domestic and external demand as well. Also, the RBI set to look past the market upset over India's election result and keep rates on hold. All right, let's check out how markets are faring this Friday in the Asia Pacific. Avril Hong's in Singapore. Avril.
The stock benchmark slipping further into negative territory. The stock gauge for the region is flat because we're seeing the South Korean benchmark and the stocks in the country back from a holiday and playing catch up in terms of tech to that Nvidia-fueled rally yesterday. So that's helping to offset what we're seeing in the rest of the region. I guess to your point about how there's not much of a move ahead of the U.S. jobs numbers, the offshore yuan is pretty flat. We're seeing that weakness coming through on the Japanese currency, though, after the BOJ today kept its bond purchase amount unchanged. There's a lot of pressure on Japan bonds today as well. A couple of other things we're tracking. The India stock futures holding steady ahead of RBI decision that's due in the next hour. Let's flip the board because that's the decision, the data coming out of the U.S. on jobs will be one that's really, really key to watch. We are expecting the U.S. to have added more jobs to the economy for the prior month and the unemployment rate to hold steady. But don't forget, this is coming after a slew of data out of the U.S. that has been softer than expected recently, including on the jolts. Whether or not this moves the needle for the Fed is another question. We have swaps pricing in, things being kept steady until the month of November. This is what we are expecting for the markets. Paul.
All right, thanks, Avril. We're going to get a bit more on the markets now. We're joined by MLive strategist Mary Nicola, also our China correspondent Min Lo. Mary, I want to start with you as we look ahead to the U.S. jobs report. One of the last pieces of data we're going to get before the next Fed meeting. What are we expecting to hear?
I think the key thing here for the markets is more so, even if the job data in terms of how much the economy added for this month, it's not going to be as important as where average hourly earnings are. And that's really the key thing here, because the Fed is expecting, let's say, softness in the data. One of the reasons why they're keeping rates high is to see some softness coming through and to see some cracks that were, but of course not too much. So here the focus is going to be on earnings and where are earnings headed, of course, because that's what feeds into inflation. And if their focus has been on inflation, the resilience of inflation, that plays a really important role. So it's really going to be what matters more is really going to be on average hourly earnings. And then, of course, how that feeds into the inflation outlook, which still remains sticky.
Min, I want to turn to you now about the China trade numbers, and they are starting to trickle out. We're just getting the January to May numbers right now. Just get you across those imports in US dollar terms rising 2.9%, exports in US dollar terms rising at 2.7%, with a January to May trade surplus of 2.4 trillion. They're making our job hard for us by drip feeding, but what's the early takeaway here for you?
Yeah, so we are still waiting for the May numbers. We're expecting exports to grow for a second month in May. I think the consensus is close to 6%, although Bloomberg Economics has it much higher at a double-digit growth. That's partly aided by the low base last year when US and Europe were still dealing with high interest rates and inflation. But also we're seeing this global uptick, especially in the electronics sector. If you look at South Korean trade last month, exports grew 9%, and that's always a bellwether for trade in the region. Imports are expected to grow
I just want to interrupt you for a moment because we are getting those numbers now. inconvenient timing, but I will get you to react to them. We didn't get those double-digit numbers that Bloomberg was looking for, but it is a beat. 7.6% exports increasing on year, but as you say, coming off a low base. Imports, a big miss though, just a 1.8% increase. The expectation was for 4.3% increase on year. The trade balance, meanwhile, also a beat at 82.6 billion. So we are seeing a recovery in China's terms of trade, but as you say, there's a base effect, there's a seasonal effect as well. When you look at these numbers, is there enough here to say, well, the economy is turning a corner?
Yeah, no, I think it's quite clear from the export and imports number, export beating estimates and imports missing the mark here. It really shows that there is, strong external demand that is boosting exports, but the domestic economy is still very weak. Consumers are not spending, and then you have the protracted property crisis. The question, though, is how far can China keep leaning on this export-driven trade? We know the U.S. has been expanding the tariff regime on China, and then EU, we're expecting them to, drop that decision on whether to place tariffs on Chinese EVs. That's going to have a much more significant impact on Chinese trade because China exports nearly 40% of its EVs to Europe, whereas some of those tariffed items that China is exporting to the US is still a very small sliver of its economy. So, it's still very uneven recovery here.
Mary, I just want to get your reaction to these trade numbers as well. Just to recap them for you, exports rising 7.6% on year. That was a beat. Imports rising 1.8% on year. That was a miss. The trade balance, meanwhile, $82 billion US. So things do seem to be improving, as Min was saying. But aside from your reaction to that, is there a need for Chinese policymakers as well to follow through on some of these promises that they've been making, particularly regards the property market, that we just haven't seen yet?
Absolutely, and of course we've seen some softer, the market reacting a bit softer today, and even yesterday as well. And of course, what the trade numbers point to, as Min explained, was the fact that you are seeing a softness in domestic demand, and the strength of the external demand is what's keeping China's growth fairly steady. So it's really for equity markets. It's about the fact that you need to see follow through. They're not happy with an uneven recovery, which puts the onus on policymakers to really come through on some of the policy promises that they've announced. And yes, they've announced measures that eases some of the property sector and eases some of the restrictions on the property sector, but it's still about solving the problems with the inventory and relieving some of the pressure that's there, and to allow consumers to give them back that confidence to start spending a little bit more. So for equities, the report's still mixed and still really highlights the uneven recovery that remains within China.
There are going to be similar policy follow-through concerns in India as well, because, of course, Narendra Modi's back in power, but not with the kind of power he hoped for. He's got a couple of minor coalition partners to consider as well. Are there going to be issues with policy follow-through there also?
Yeah, we're already seeing that there's a little bit of instability within the equity markets, just trying to digest what comes next. We know even with, because there's no supermajority, probably things like land reform, labor market reform, some of the more contentious reforms are not going to be passed through because they weren't passed through before. We have to remember when he had a majority partnership. So there's still some that's going to go through in terms of how is the market going to understand what are the policies thereafter, and where is this new government headed. And of course, the focus still has to be on growth policies and growth-oriented policies, and for growth to continue and sustain itself at 7-8% at the very minimum, for equities to continue to rally. Because at the end of the day, one of the key things that has supported India and has set it apart from China is the fact that it's not only delivered on earnings growth, but it's also delivered on GDP growth as well.
All right, MLive strategist Mary Nicola and our China correspondent there, Min Lo. So let's bring in our Amisha Vora, chairperson MMD of the Prabudas Lilada group. Amisha, I just want to follow on from what Mary was saying there regards the incoming, the Narendra Modi's third term. He's got a couple of coalition partners to consider now as well. Are you anticipating any change to policy or any cabinet announcements that might cause you to reconsider your investing ideas?
So I feel that the key change which Mr. Modi brought during his last 10 years was a continuous rein on reallocation of budgets and fiscal deficits. So from absolutely revenue-oriented expenses in budget, he increased the capital allocation in the budgets almost 3x in 10 years. And so while the entire private sector spending was not moving, it was the budget and government sector spending which kept India's growth momentum on. And I feel that now, since he's again forming the government, of course with coalition, but I've seen him throughout the ups and downs, including COVID, when he has never allowed this direction to be changed. So I feel the direction of the new NDA government also will be capital goods oriented, capital formation oriented, and development of infrastructure. I do concede that some of the core reforms, maybe labor-related reforms or agri-related reforms, even last time we as in India could not do. And this time also it will be very difficult. But what we do in terms of ordering, spending, and development of infra will keep the 6.5%, 7.5% GDP growth intact.
So has that caused you to reallocate your portfolio at all, or is it steady as she goes? Are you keeping the same settings that you had prior to the election?
So most of the portfolios had a very large allocation, I would say disproportionate allocation to public sector undertakings, and within that to defense, shipbuilding, a railway, a road. And I think that led to a lot of, you can say, over-allocation within the portfolios to this. So we feel that the direction will be same, but both due to over-allocation as well as very high multiples, there will be a time when there will be a time consolidation or time correction in these sectors. But if we take a medium-term view of 2 years plus, we continue to remain very positive of this. Where we have added weights is sector like telecom, sector like healthcare, and sector like higher spending with his hotels or some other sectors like EV. So these are the added sectors where we increased our weight a bit. But we feel that where the larger allocation is, which is into infra and capital goods and manufacturing, might undergo a little time correction.
Now, I know you're not keen to discuss the Reserve Bank of India meeting that's coming up later today, but in broader terms, in terms of the rate environment in India at the moment, how restrictive are you finding current conditions? And given elevated rates, you can get a pretty reasonable return on cash right now. What's your cash allocation?
Pre-election, we had kept our cash allocation to somewhere around 6%. And because we got a dip, we have reduced it back to about 2%. But I would say that from Reserve Bank perspective, because of a very large dividend which RBI gave to government, the entire fiscal outlook has become very steady. And because of which, I think RBI will be able to follow the path which it needs to in terms of direction of rates and speed of rate cut.
We did see a pretty volatile week for markets this week as the exit polls came out. Fair bit of selling midweek, but if we take a look at PE ratios in India, they're pretty richly priced, 23 times earnings. Did you feel like a correction was perhaps due for markets?
Yes, that we definitely feel that not from, I would say, Nifty perspective alone, but there was a lot of action and very high PE multiples in mid-cap, small-cap. And there I feel that the the correction will be actual in terms of price, and that will continue for quite some time in this year, because the last 1.5 years have seen mid-cap, small-cap rise substantially. And now they are at a premium to the large cap. So I feel that, yes, the premiums valuations are very rich in mid and small, but large cap, if you see on a very broader basis, in last 6 years, there is a 15 to 16% growth in Nifty, and same is the earnings growth. So we have not re-rated ourselves substantially.
All right, Amisha Vora, we'll have to leave it there, but thanks so much for joining us. Amisha Vora is chairperson and MD of Prabhudas Lilladher Group. All right, coming up on Bloomberg Markets Asia, India's central bank, as I mentioned, going to be delivering its latest policy decision on the heels, of course, of Prime Minister Modi's weak election win. We're going to preview that the RBI's next move with Kotak Mahindra Bank. That's coming up later this hour. First, though, Alibaba.com is expecting AI to help boost global trade. Our exclusive interview with President Carl Zhang is up next. This is Bloomberg. All right, just want to recap those China trade numbers for May for you. A real mixed bag, 7.6% increase in exports on year, 1.8% decrease in imports. So a big beat on exports, a miss on imports, but seasonal factors, low base effect at play here to consider as well. The trade balance, though, was a beat, $82.62 billion US dollars. Well, Alibaba.com has launched a cross-border trade service to help streamline the supply chain for smaller companies in the US and beyond. Their president, Carl Zhang, spoke to Bloomberg exclusively about their expansion plans and the impact of tariffs on its platforms.
Now, Alibaba.com, actually, we serve around 200,000 SMEs, suppliers, in China and also globally. And what we see this year compared with last year, I think several things. The first one is more and more SMEs is willing to participate in the global trade. So they are more willing to sell globally. So one example is that, so there's a small city in EU, all the commodities actually selling and distributing in EU. And for the first quarter of this fiscal year, so customers in EU who join Alibaba.com actually grow 70% compared with last year.
Where are you really aiming to expand then Alibaba.com? Which markets are you going after?
So let's say from the buyer side and the supplier side. So from the supplier side, actually we expand the supplies. So now it's not only in China, but it also expand globally as well, like in Southeast Asia, in Korea, in Europe, in Mexico, and North America. And last year, actually, we do acquisition in Europe called Visible, which is the biggest kind of marketplace in Europe. VOV for the Dutch language area and Europages for the rest of Europe. So now we are supporting them from the technology perspective to enable them to boost from the yellow pages to transactions to the kind of like the guarantee services that we provided to help the intra-business kind of trade. And Alibaba.com can help the global SMEs do the cross-border trade. So this is what we're going to expand. And for the buyer side, actually it's the global buyers. The buyers, which is booming now, is in US, in Europe, and also in Latin America and Southeast Asia, this kind of developing countries. And different countries actually have the different type of demands for different categories.
the value proposition, I think, from a buyer is pretty clear. You know, you can get perhaps a product for a cheaper price. What do you think then that there are concerns around overcapacity, for instance, from a lot of different European countries? How do you respond to those concerns? Because that sort of does speak quite closely to the Alibaba.com model of being able to connect more suppliers to new markets and offer good products for lower prices.
So in one way, that we kind of enrich our selections with multiple supplies, like supplies in Europe. So we see there's a great supplies for fashion in France, like wines in Italy, and the machineries in Germany and in Italy as well. So there's a lot of SMEs actually doing a great job on Alibaba.com. And as well as we mentioned before, that we do acquisition, investment on Visible. We do that it's not only for a kind of financial investment. We are going to use our technology and the know-hows to kind of boost their technology engine to help the small and medium business within the Europe to do the kind of intra-Europe collaboration. So I think there's one part. The second part is the fundamental rule for global trade is supply and demand. So if there is demand required for kind of a quality product with a better price, and what we are going to provide is to lower the barrier for both sides. So the SMEs themselves, the entrepreneurs themselves, can survive, get enough margin out of that, can make a business.
Earlier this year, we did some reporting from the Canton Trade Fair, and some of the different people that we were speaking to there said that even with the risk of some very hefty tariffs, and that was referring to possible Trump tariffs if he were elected president again, but they would be able to withstand them given that the price is so competitive that's coming from China, and the quality as well is also so high that it still is a very competitive and compelling way or area or country to purchase from. What's your view on how much Chinese companies and the SMEs that are on the platform, how much can they withstand that risk of extra levies being applied to their products?
Okay. All the entrepreneurs, from their eyes, there are many problems that they need to solve. So what product I'm going to provide? What type of employees I'm going to hire? And what about the kind of, the economics, tax? And tariff is only one part of the tax. So when we see the global supply and demand, we're starting from the fundamental ones and how to improve the efficiency and how to help them to build up their own business based on the global supply chain, which is more competitive also for the SMEs. So that is what we do today.
That's Alibaba.com President Cao Zhang speaking exclusively to our tech reporter Annabelle Jewellers. This is Bloomberg. Let's take a quick look at some of our global market movers at the moment. A little bit of weakness in China. That's notwithstanding that mixed bag of trade figures we just had out from a short time ago. Exports in China for the month of May, 7.6%. That was a beat. The trade balance also a beat by $10 billion. Got a few commodities doing quite well. Rubber, palm oil performing strongly, and the Indonesian rupiah having a reasonable day as well. We are standing by also for CPI figures out of Thailand. We should get those in just a few minutes' time as we count down to next week's Bank of Thailand decision. All right, also still to come, Meituan shares going to be in focus after the food delivery giant delivered a revenue beat, also announcing plans to expand to the Middle East. We'll have details on that next. This is Bloomberg. Welcome back. Let's take a look at how China's markets are faring. Just heading to the lunch break at the moment. Kind of going sideways. Some minor losses as well. 0.7%. That's how much the CSI 300 is off right now. Markets around the region sort of going sideways at the moment as we await those non-farm payroll numbers out of the US. Second last piece of key data before the next Fed meeting. We did get some important data out of China a short time ago. Exports jumping more than expected in May, so that's boosting the growth outlook for China, rising 7.6% on year. Obviously a base effect and a seasonal effect to consider there as well. Imports increasing 1.8%. That was a slight miss, but China reporting a trade surplus for the month of May of $82.6 billion, and that was a little bit more than we had expected. If we also take a look at property stocks within that index, they are recovering a little bit today in China. But as we were discussing earlier on, there really is a desire among the market to see a little bit more follow-through in terms of policies to support property. We've got mortgage delinquencies starting to rise, now the highest in 4 years in China. All right, let's take you to Thailand now. We're just getting those CPI numbers as promised for the month of May, seeing an increase here of 1.5%. That's a bit sharper than expected. The expectation was for 1.2%. So CPI in Thailand increasing 1.5%. In the month of May. Now, we do have a Bank of Thailand decision coming up next week, June the 12th. We have heard reports that the government's been pressuring the Bank of Thailand to cut rates. BOT, meanwhile, not that keen on easing. There's high household debts, increasing financial risk. Doesn't really want to further worsen the rate differential with the dollar either. But with this hotter than expected inflation print out of Thailand, one would think that that would add to expectations that the BOT is going to remain on hold at 2.5% next week. All right, let's take a look at how this is playing out in terms of foreign exchange. Averill, how's the baht looking?
Yeah, Paul, that would be really interesting to watch, right? I mean, we see that higher than expected headline print, but the core is in line with expectations. And the core print has actually been pretty low of late. Despite all this, the Bank of Thailand has been, keeping rates unchanged and withstanding the pressure from the government to ease rates because of what this would mean for, financial risks in the country and the pressure it would exert on the Thai baht. The currency has been gaining ground for much of this week, and we're still seeing it hovering around the 36.30 level. Where we are seeing a lot of volatility, Paul, is in the Indian rupee, and we have an RBI decision due later today, and it's expected to leave rates unchanged. But where we might get more signaling is in maybe some dovish commentary to kind of boost confidence. I mean, this week that election result shocker has raised some concerns about India's commitment to growth-oriented policies. So that has also affected the currency, and we might see some comments from the RBI to kind of soothe things in that direction. That would help bonds in India as well. Now, let's flip the board because I wanted to take you through what we're seeing in Japan. The stocks there have been moving sideways for much of the session in anticipation of the US jobs print. We are seeing a lot of pressure on bonds in the country, though, after the BOJ today kept the bond purchase amount unchanged, although we had a Bloomberg survey talking about how the majority of BOJ watchers actually expect the central bank next week to kind of send more signals or even cut its bond purchases. This is what we're seeing in the currency as well, that weakness coming through after it kept that bond purchase amount unchanged from the BOJ. Let's flip the board because while we were in the lunch break in Japan, we actually got a Bloomberg scoop about how some of Japan's biggest banks, MUFG as well as SMFG, they're going to be cutting their holdings of Toyota shares. This is part of a government push for them to unwind their cross-shareholdings, and it's designed in a way that would kind of limit the impact on Toyota stocks. We're seeing the stock of Toyota, though, accelerating losses. It was about 0.4 lower when we entered the lunch break, so steeper declines now. The Japanese bank seems to be paring the losses, MUFG. Sumitomo, we're not seeing that much reaction there. This is what we're seeing in the markets for now. Paul.
All right, thanks very much, Averill. Let's shift our attention to Chinese EV maker NIO now. We've seen shares tumbling after first quarter earnings missed estimates. Well, let's get some more on this from our tech reporter, Annabelle Drewlers in Hong Kong. So, Belle, we were expecting a loss, just perhaps not one quite this big.
Yeah, that's right, Paul. I think we had that guidance that the company sort of adjusted expectations around the March period just to say deliveries wouldn't be quite as high as had been earlier predicted. So, yeah, we did have some signalling coming through, but still the numbers really not that great. And we saw, for instance, revenue falling to around the 10 billion yuan mark. That was worse than expected. And then as well, bigger than expected loss. So that widened to around the 5 billion yuan mark. So about $680 million for the period. That is something as well that is expected to stay fairly steady even as we head into the second half, and that's what we're hearing from the likes of Citi and Bloomberg Intelligence saying that, yes, expect that net loss to sustain even if you do see a return of sales growth.
Well, this is, of course, a fiercely competitive business, particularly in China. Is that competition the whole story here in terms of NIO's loss, or just part of the story?
Yeah, it's certainly been a big challenge for the company. I mean, we know that there are so many different EV makers that are bringing models onto the market all the time, and the innovation cycle is really short there. But what's going to be really interesting to track for the performance of NIO moving forward is going to be this new mass market brand that it's bringing to market. So this one's called OMVO, and the aim here is really to take on those EV competitors and Tesla in particular with its locally built models. But the first cars for that are going to come in September, so we're still a few months off really knowing how that performs, and also as well how NIO goes in terms of expanding and finding opportunities outside China, because that's been a big focus for a lot of big Chinese companies looking for growth. And NIO, for its part, is saying that even if there is the risk of EV tariffs or subsidies coming into effect with European exports, they're still looking into that market, and they're as well still looking into the Middle East possibly later this year.
Let's take a look at Meituan as well, the food delivery platform. It's losing a bit of ground in Hong Kong at the moment, even after first quarter sales beat estimates. What were the highlights here?
Yeah, it's been interesting trading reaction so far this morning because, as you said, we actually did see Meituan coming online higher, but it's sort of paired those gains throughout the session so far. But essentially, numbers were actually better than expected here. So we saw, for instance, revenue of around $10 billion in the March quarter, a little bit higher than what analysts had been expecting as well. And net income for the period rose 60%. So it's a sign, perhaps, that Meituan is actually really doing pretty well against its competitors in China, because you've got the likes of Alibaba, or you've got new rivals as well, Kuaishou, ByteDance. They're bringing their own food delivery platforms onto the market. So it tells us that they actually are doing a good job of fending that off, and also just trying to streamline their operations, bring down their costs as well. But of course, the market in China does remain very shaky, and this was actually highlighted during the call that those base effects are going to actually start to sort of come into the numbers as we move ahead, because there was a low order base of last year. That's not going to be the same story for the second quarter.
Yeah, Meituan had something to say about its expansion plans as well, right? Is it coming to the Middle East soon?
Yeah, this is interesting because we had a Bloomberg scoop out on this a few weeks ago, but that was, yes, exactly as you said, highlighted during the conference call that like NIO and like other Chinese companies that are looking to expand abroad, Meituan is thinking the same thing. So they've actually already got their own food delivery app. This is called Kita. That actually, if it sounds like cheetah, that's because that is a sort of nod to that animal. But it is already in the Hong Kong market here. It has performed very well here. It's actually the #2 food delivery app in the city, and so that foray that the company has made sort of sets the stage for further expansion. And the Middle East has been highlighted, and also just in terms of how Meituan is structuring itself as well, because the CEO Wang actually took direct control of the overseas business in February. And so again, it just tells you how much these international ambitions, how much the importance of those has been elevated.
Yeah, right. Annabelle Drill is there in Hong Kong. And on the subject of food and inflation, the rising cost of living here in Sydney as well has been pushing some of the city's top restaurants out of business. A few names that the international audience might have heard of. One of them is Tetsuya's, a very well-known restaurant here, closing its doors next month after 35 years in business. Part of the problem here is rising wages, rising prices. This is familiar to many developed markets around the world, seeing consumers cutting back on discretionary spending. We've got a change in regulations coming up in Australia in August as well, which will improve conditions for casual workers. Makes things a bit tougher for the hospitality business, though. We've got insolvencies now in Australian hospitality at a 5-year high. All right, let's take a closer look at that data that we just had out of Thailand a moment ago. CPI for the month of May coming in at 1.54%, so a slight revision to that, coming in a bit higher than the 1.5% we mentioned earlier. That was very much a beat on the expectation, though, of an increase of 1.2%. Bank of Thailand meeting, of course, coming up next week. You'd like to think that this adds to the argument that they're going to hold 2.5%. Speaking of central banks coming up, India's central bank widely expected to also keep rates unchanged later on today. Kotak Mahindra Bank's chief economist will be here to share her insights next. This is Bloomberg. And welcome back to Bloomberg Markets Asia. You're watching the India focus. So here's a look at Indian markets as we count down to the open, just about 3 minutes away now. It's been a very volatile week for the major indexes in India. Looks like it's going to be a quiet day to close out, though. Most of those futures in the pre-open looking pretty flat at the moment. And yeah, wild week indeed so far for Indian stocks. The market did raise more than $380 billion at one point after that shock election result. So for more on where the markets are going to go from here, let's bring in our Asia equities reporter, CJ Chakraborty. So CJ, been an interesting week. What's in store today?
Yeah. Well, we have now, in the immediate aftermath, we are looking at the RBI's policy, where, of course, the central bank is expected to stand pat on the interest rates. But if you look into, further ahead over the next 1 month to 2 months, markets clearly will be now looking at the budget that is going to come up. Remember, in February, we had an intermediate budget, but now the full year budget will come up possibly in the coming months. And I think market would like to know, what would be the policy setup. Clearly, there has been a lot of debate and discussions on what a new coalition government means for policies as well as reforms, and market would like to have some clarity on that. So I think those are the two things that clearly will be on investors' radars for India over the next coming months.
Yeah, one of the key questions is, do you buy this dip? What are you hearing from investors?
Well, it's been a fascinating week, Paul. If you look at the market, despite the the sort of sell-off we saw on Tuesday, we are still actually up for the week. And overall, year to date, MSCI India is doing pretty well, up about 11%, and actually outperforming both peers in Asia as well as the MSCI China for the year so far. So, I mean, you could also say that it's much ado about nothing. Clearly, there has been a lot of investors who were sitting on the sidelines, waiting for this election to get over. And they are seen to be participating in this market because we have seen a handsome rebound the past couple of sessions. Although we have not yet recouped the losses that were triggered by the election outcome on Tuesday, but it seems like we are on our way to recouping them, and possibly that could happen next week.
You mentioned the budget coming up. Do we have any hints of who the finance minister might be yet?
Yes, that's the key question on everybody's lips, Paul. I think everybody's waiting with bated breath as to who the finance minister would be. Speculations are rife. Of course, it'll not be right to mention that right now, but clearly that is one portfolio out of the cabinet that Prime Minister Narendra Modi is likely to make that will be keenly watched by investors, because let's not forget there were a lot of discussions around taxation in capital market, possible direct tax reforms, and of course, a lot of talks about inheritance tax, etc., etc. So clearly, what the new finance minister will be, what his or her ideology is around taxation, would be something that stock investors definitely would be watching out for.
All right, Asian equities reporter CJ Chakraborty in Mumbai. And as CJ was speaking there, we did see the Indian markets open, and as the pre-market suggested, things are pretty quiet. Kind of refreshing after the week that we've just had. But if we take a look at the Nifty Bank Index, that's looking a little bit softer, as CJ mentioned. A bit of few questions remaining about what's going to be in the budget, and indeed what the cabinet makeup of Narendra Modi's third government is going to look like, and who the finance minister will be. But at the moment, the early trade looking fairly quiet, well, at least compared to the volatility that we've seen this week. Okay, let's get now to Upasana Bhardwaj, Chief Economist at Kotak Mahindra Bank, because Upasana, we do have another important milestone coming out of India today, and that is, of course, the RBI decision. The tightening that we've seen so far, I'd like to get your opinion on how successful that has been in cooling inflation and perhaps how far away we are from seeing easing in India. All right, we seem to be having some trouble with Upasana's connection. We'll try and reconnect the line to her and get back to her as soon as possible. But we are, of course, as I mentioned, counting down to that Reserve Bank of India decision later on today. We're expecting to see the bank stay on hold at 6.5%. That'll be 8 meetings in a row. So that conversation coming up. This is Bloomberg. All right, let's take a look at how we're tracking on India markets at the moment. It has, of course, been a pretty wild ride this week, as exit polls initially predicted a very solid majority for the third Modi government. Didn't end up materialising. He's back in power, but with a couple of minor coalition partners as well. That notwithstanding, markets for the week are still higher, but we're seeing a rather quiet day to close out the week, at least in this early stage of trading. The Sensex looking flat, the Nifty also flat. Nifty Bank Index, that's off by 1/3%. Of course, key questions around this incoming government is, well, who's going to be in the cabinet? We don't know yet. We don't know who the finance minister is going to be, and there is a budget coming up as well. So that might perhaps explain some of the uncertainty around some of those banking stocks as well. But let's take a look at how Adani stocks are tracking also, because, of course, the infrastructure story has been huge in India under the Modi government as well. This is a mixed bag also. Adani Enterprises off by 0.5%. Power better by 2/3%. Ports also better by 1% as well. Home building, residential, that's a space that we're going to be watching in India closely as well. Might satisfy the perhaps the request of some of those minor coalition partners also to do a little bit more for those living in India in poverty. There are still 800 million people in India that live on $10 a day or less. Okay, we are counting down to the Reserve Bank of India rate decision as well. That's going to be coming up in the next hour. The RBI is widely expected to keep rates on hold for 8 meetings in a row. Bloomberg Economics says the central bank is going to hold to avoid triggering any capital outflows. The RBI may send dovish signals, though, to spur confidence and pave the way for a rate cut maybe as soon as August. All right, let's get back now to our guest, Upasana Bhardwaj, Chief Economist at Kotak Mahindra Bank. Upasana, thanks for holding on while we tried to reconnect with you there. So we are expecting, as I mentioned, the RBI to stay on hold again. I just want to get your view on how successful the bank has been so far in containing inflation, and is this talk of a potential cut in August a bit premature?
Yes, Paul, I would say it's a little premature. Of course, the status quo in this policy, both on the stance and and on the rates, is a given. But the talks of possible easing right away in the upcoming, in the next meeting in August seems a little too early, because there are a couple of things which RBI will have to be a little cognizant about. There is something which we have to be very careful on the food inflation side. Expectations are that monsoons are going to be good, and that should result in relatively comfortable food inflation. But we have seen in the past that the situation has turned out to be very volatile. So I think August is where they can set the stage for a possible easing in the next policy. But August itself may be too early. Apart from that, of course, by August, at least, a possibility of stance change may to an extent open, is only because, by then we would be done with two uncertainties. One is having better clarity on monsoons, and the other could be on the fiscal side, wherein the fiscal, particularly the expenditure, the quality of expenditure, is there going to be any change on that? That remains to be seen. While we do not expect any slippage really on the fiscal side, because there are enough buffers which the government has, and they will be able to manage their fiscal consolidation roadmap. But still, the quality of expenditure is going to be crucial in determining the impact of that on core inflation. So I think all of this is important. And before that, we would not be comfortable looking for a possible easing in terms of rates. But the possibility of a stance change may occur in August, but we'll have to wait and watch. I think more important here is the liquidity angle from RBI's point of view, how they would allow and how much of liquidity improvement will they allow in the system going ahead, because most of the factors are likely to turn positive in terms of creating better liquidity beyond the next few weeks. So July onwards, we expect the banking system liquidity to turn amply surplus. And that's where the crucial part is how RBI is going to react to that, whether they would still remain in the mopping zone or they would allow liquidity to remain surplus. That is something which is going to be more crucial. Even trying to get cues on today's policy on that account.
Yeah, Upasana, you mentioned some of the commentary around the outlook for rates. I also wonder if you're expecting to hear anything from the RBI that might help stabilise the currency after what's been a pretty volatile week for the rupee.
I think, currency has moved in line with broadly how most of the other emerging economy currencies have moved. And of course, we've had a volatile period. The last 1 week has been extremely volatile. But I would say RBI would firstly never provide any clear guidance on where the currency is going. They would definitely try to curb the volatility, and that's what their stance has always been. So I don't see any incremental new guidance coming on the currency front. They will let rupee move a little and allow the rupee to be a little more volatile, I think, because fundamentally, I believe Indian economy is very strong and it can weather a little more volatile currency.
All right, Upasana Bhardwaj, Chief Economist at Kotak Mahindra Bank. Unfortunately, we'll have to leave it there. But you can also tune to your Bloomberg, of course, for more of our live coverage on the RBI. That decision now coming in just 35 minutes' time. You can go to TLive Go, that is TLIV Go, to get commentary and analysis from Bloomberg's expert editors. All right, let's take a look at what is moving on global markets right now. We are having a bit of a quieter day to close out the week. It has been an interesting week, though. We've got the CSI 300 in Shenzhen off by about 0.75% at the moment. If we take a look at the commodities space, it's some of the less glamorous commodities performing quite well today. We've got rubber, palm oil in positive territory at the moment. But the big macro event of the moment coming up, that is the RBI decision. We'll get that in just under 35 minutes' time. All right, that is it from Bloomberg Markets Asia, Horizons Middle East and Africa coming up next. This is Bloomberg.